Hi, this is Balakrishnan again. Welcome to BALAS Accountancy Special Classes. We'll be continuing today with the chapter Depreciation, and the topic being scheduled today is methods of recording depreciation. I repeat, recording depreciation. As I had already mentioned in my past video reference number BAC016, there are about 8 different methods of providing or allocating depreciation. I repeat, providing or allocating depreciation. Straight line method and return down value, what we have discussed in the previous episodes, are just 2 different ways of providing or allocating depreciation out of this lot of 8. Well, today we will be discussing about the 2 different methods of recording depreciation. I repeat, recording depreciation. Before I shift to the sharing mode, let me mention certain points using the whiteboard behind me. Methods of recording depreciation. First method, by charging to asset account. Please recall, the depreciation entry what we made all along was depreciation to asset account. Is it not? So what happened? The asset account got directly affected. That was the system all along we did. Today, it is by means of creating provision for depreciation account. In other words, depreciation entry when we make or when we propose, it will not affect the asset account directly. So please make these 2 journal entries very thorough. More you will learn in the sharing section immediately following. Just keep these 2 essential entries. These are the specialties of this provision. Okay, first, for charging depreciation. What was the entry all along? Depreciation to asset. It will be replaced by depreciation account debtor to provision for depreciation account. So provision comes to picture. The credit will be given to provision for depreciation account instead of the asset account. And in the event of sale or discarding of an asset, provision for depreciation account debtor to asset account. What for we should do that? The accumulated depreciation in respect of the item that has been sold or discarded must not appear in the provision account. It must be shifted to the asset account, so that asset account will indicate the book value, the latest book value, or the book value on the date of sale of this particular item. Okay, that's the meaning of it. So more we are learning just now in this sharing session. Thank you. Well, students, those of you who are interested to have online tuition with me, mind, I don't keep more than 3 or 4 students maximum at a time, or you want to clear your doubts, please use my WhatsApp number as is given here, 70192306629. I have taught more than 600 number of students in Bangalore city over a period of 22 years. Now I am settled here in Kerala. In my retired life, I would like to give exclusively for a selected few students online tuition. Thank you. Well, students, I have already given you a fair idea about the difference between first method and second method of recording of depreciation. Now, let me share some detailed notes also with you. Well, first method, by charging to asset account. So far, the accounts related to the depreciation what we have maintained are only under this first method, wherein the accounts prepared were just 2, asset account and the depreciation account. Second method, by creating provision for depreciation account. Under this method, the depreciation is credited to provision for depreciation account instead of asset account, and hence the asset account always appears in the ledger at its original cost. Or in other words, the asset account balance will be intact so long as there will be no purchase or sale. The balance on the credit side of provision for depreciation account shows the accumulated depreciation credited to date in respect of the asset. That means credited till date. However, when the asset is sold or discarded, the total accumulated depreciation for that asset is transferred to the credit side of the asset account, thereby cancelling this much amount of accumulated depreciation from the provision account, which is no longer required. Thereafter, the balance in the provision for depreciation account will indicate the accumulated depreciation on the assets in service or unsold assets. Well, now let me share with you one full-fledged sum worked out by me. Entry by entry explanation I am giving you. Thank you. Well, students, the sum being worked out is question number, practical question number 23, page 16.59, TK Goel Cbse 2019. Well, it's as follows. A company purchased second-hand machinery on 1st May 2009 for rupees 5,85,000 and immediately spent rupees 15,000 on its erection. On 1st October 2010, it purchased another machine for rupees 4 lakhs. On 31st July 2011, it sold off the first machine for rupees 2,50,000 and bought another for rupees 4,20,000. On 1st November 2012, the second machine was also sold off for rupees 3 lakhs. Depreciation was provided on the machinery at rate of 15% on equal installment method. That is nothing but the synonym of SLM or straight line method. Show the machinery account, depreciation account, and provision for depreciation account, assuming that the books are closed on 31st March every year. The very mentioning of provision for depreciation account means that we have to adapt the second method, and thereon we have to prepare 3 accounts. That means an additional accounts in addition to asset account and depreciation account. We have to prepare here provision for depreciation account. Depreciation account and asset account only we used to prepare in case of first method, whereas when provision comes to picture, an additional account, provision for depreciation account also we have to prepare. Well, the answer hints given by the author is balance of machinery account on 31st March 2013, rupees 4,20,000. Balance of provision for depreciation account on 31st March 2013, rupees 1,05,000. Loss on sale of first machine, rupees 1,47,500. Gain on sale of second machine, rupees 25,000. Well, now I had to convince you with my worked out answer and also with entry by entry explanation. However, before I take up that one, let me make it very clear. As far as a provision account preparation is concerned, it hardly matters whether SLM is to be applied or WDV is to be applied. Okay, thank you. Well, students, before I proceed with the worked out answer explanation, let me equip you with certain steps and journal entries, rather the complete steps and journal entries in respect of recording depreciation method 2, that is by creating provision for depreciation account. 1. No entries in the asset account for depreciation, since the entry for depreciation will be depreciation account debtor to provision for depreciation account. We are not operating asset account here, hence no entry. In other words, year after year, opening balance of the asset account will be the closing balance unless there is a purchase or sale of an asset. 2. For closing the depreciation account every year, the journal entry will be statement of profit and loss debtor to depreciation account, because depreciation is a nominal account and we need to transfer every nominal account to the statement of profit and loss account. You will learn all this when I will be teaching you the final accounts. Okay. 3. Asset account and provision for depreciation account balances will be carried forward every year. In other words, these accounts cannot be closed so long as there is an asset. There will be a balance and it will be carried forward every year. 4. On sale of an asset, Step A, calculate the pending depreciation, if any, for the current year and make the entry for depreciation as mentioned above. What is the entry? Depreciation account debtor to provision for depreciation account. When this such calculation is required, suppose asset is sold midway or after any day after the beginning of the year, means proportionate depreciation we have to calculate. Next, B, ascertain the till date provision for depreciation, or in other words, accumulated depreciation in respect of the item to be sold from the date of purchase to till the date of sale. That you have to separately calculate. Then C, transfer this accumulated depreciation from the provision for depreciation account to the asset account as follows. Provision for depreciation account debtor to asset account. This journal entry will ensure that the provision is taken off from the provision for depreciation account because this asset is no longer there or it is not going to be there, right? And the book value of the asset is arrived at in the asset account by bringing the accumulated provision to the credit side of the asset account. Okay, right. Next, for amount received on disposal of asset, that you know well, bank to asset account. For profit on disposal, that also you know, asset account debtor to statement of profit and loss, and reverse entry in case of a loss. So all these steps will make you very comfortable when I'll be explaining the sum ahead. Thank you. Well, students, before I start explaining my worked out answer, let us approach the sum in a very systematic way. First, let us list down the salient features as is available in this question. Number one, we have to provide depreciation under equal installment method. That is nothing but a synonym of straight line method. Number two, 3 successive purchases of machines are there, and first and second machines subsequently sold off. Number 3, provision for depreciation account is to be shown. Hence, ledger accounts in connection with the provision method we have to operate. That is 3 different ledger accounts: asset account, depreciation account, and in addition, provision for depreciation account. Further, please note that straight line method or WD method of calculating depreciation hardly matters for recording in provision account. Okay. Now, what we should do is that we should have a grip, year-wise grip on all these 3 accounts. We have to satisfactorily close it, then proceed. Well, number 1, a company purchased second-hand machinery on 1st May 2009 for 5,85,000 and immediately spent rupees 15,000 on its erection. So to bank 6 lakhs. Okay. Now we don't find anything before 31st March 2010. Hence the accounts to be closed here. Of course, 31st March we have to account for the depreciation. So depreciation to provision for depreciation 82,500. Naturally, provision for depreciation by depreciation 82,500. If you want to know, the calculation is that for 11 months on 6 lakhs, it works out to be at the rate of 15%, 82,500. Okay. You can check all this calculation at your end. Now let us close the book for this year. Land and machinery, just carry forward balance. Okay. Depreciation by statement of profit and loss. I presume you have thoroughly learned the journal entry, what I had taught just now. Okay. So that account also closed. and depreciation account carry forward the balance 80 to 500. Oh, so this year we have taken care. Next year, each account where our balance carry forward is there, we have brought forward. Okay, let us examine what happened next year. On 1st October 2010, it purchased another machine for rupees 4 lakhs. So to bank 4 lakhs. Then we don't find anything happened before 31st March. So let us start the depreciation. So depreciation to provision for depreciation total comes 1,20,000, 90,000 plus 30,000. How it is like that? First machine full year 90,000. Second machine for 6 months only it came to the picture. So 4 lakh into 15% interest is very total 30,000. So total comes 1,20,000. Depreciation to provision for depreciation 1,20,000. Naturally, provision for depreciation by depreciation 1,20,000. Now let us close all the 3 books. Total the heavier side, put the same total, asset account, balance carry forward. Depreciation account, total depreciation for the year is 1,20,000, transferred to by statement of profit and loss. And provision for depreciation, what's the total provision? There was an 82,500 brought forward, supplemented this year with 1,20,000, and the total comes 2,02,500. Or in other words, total ledger. Total the heavier side, put the same total across and find the balance, carry forward overall. So that here also we have dealt it. Now let us see what happened subsequently on 31st July 11. That means in the next financial year, 11-12. It sold of the first machine for 2,50,000. Okay. I told you, whenever such sale takes place, the first step is to find out what has been the pending depreciation for the current year. Okay. We find that for 4 months, it goes on 31st July, April, May, June, July. 6 lakhs into 15 by 100 into 4 by 12, 30,000. That depreciation let us account first. Depreciation account to provision for depreciation 30,000. Immediately your hand should move to provision by depreciation 30,000. It's a double entry action. Okay. I find the original book value was 6 lakhs because first machine, and the accumulated depreciation 2,02,500. How do I get it? Yeah, I totaled all this depreciation in respect of the machine 1. I found it 2,02,500. Yes. So book value, this minus this, it is 3,97,500. Just been categorically told they sold it for 2,50,000, thereby resulting in a loss of 1,47,500. Let's account the facts here. First itself is the provision for depreciation 2,02,500 in respect of machine 1. The entry will be provision for depreciation account debtor to plant and machinery. I'm sure you have learned the entry properly. Okay. Naturally, plant and machinery by provision for depreciation 2,02,500. Okay, fine. Now, what happened next? I sold it for 2,50,000. So bank to asset or asset by bank 2,50,000. And there has been a loss. The loss is nothing but statement of P&L account debtor to plant and machinery. So by statement of P&L account 1,47,500. Well, after this sale, nothing else happened during the year. So let's move towards account of the customary year-end depreciation. I've shown an entry, depreciation account debtor to provision for depreciation account as on March 31st, 2011. How I got this amount? It's just like this. First machine is not at all in the picture. It has been sold and hence there is no depreciation. Second machine for the current financial year 60,000 and third machine for the current financial year 42,000. Therefore, this amount of 60 plus 42, 1,02,000. Depreciation to provision for depreciation 1,02,000. That is nothing but provision by depreciation 1,02,000. Now let us close the account one by one. First is asset account. Plant and machinery account. Total the heavier side 1,42,000. Put the same total across. Find the difference. That is nothing but 8,02,000. That is balance carry forward. We can have a fair assessment of this one like this also. See, first machine sold off, second 44 lakhs, and third 4,20,000. Hence 8,20,000. That's also we are reconfirmed. Fine. Then next one, depreciation account. Depreciation account year end has to be transferred to by statement of profit and loss account. So that has been done. 1,32,000. Total heavier side, put the same total. The difference has been transferred to the statement of profit and loss account. Now comes the provision for depreciation account. So provision for depreciation account. Total the heavier side 3,34,500. Put the same total across and balance carry forward 1,32,000. Then let's see what happened in this financial year of 2012-13. The first event what happened is on 1st November 2012. That means financial year 2012-13. The second machine was also sold off for rupees 3 lakhs. So let us deal this sale. What is the first thing to be done? Pending depreciation. How much is the pending depreciation in respect of machine 2? Only for 7 months. Why 7 months? 1st November means practically 31st October. Okay, that is 7 months, April to October. So 4 lakhs into rate into 7 by 12, 35,000. Let me account that first here. Okay. So that 35,000 rupees, what will be the entry? Tell me. Depreciation account debtor to provision for depreciation 35,000 on November 1st. Naturally, my hand has to move here also. November 1st, 35,000. That's over. And the next step, find the accumulated depreciation and account it. What has been the accumulated depreciation? Add up all this, you'll find 1,25,000. Okay, let me account that one. So 1,25,000, I have to shift from provision for depreciation account to where I have to shift it to my asset account. Yes, the entry, you learned the entry properly, I'm sure. Provision for depreciation account debtor to plant and machinery account 1,25,000. So naturally, by provision for depreciation account 1,25,000. Well, that's also over. Now, account for the amount realized by bank 3 lakhs and check whether it's a profit or loss. Original value was 4 lakhs. Accumulated depreciation 1,25,000. Book value as on date of sale is this minus this 2,75,000. It has been realized for 3 lakhs. Obviously, there is a gain 25,000. And the appropriate entry I am showing to plant and machinery account. The entry will be plant and machinery account to statement of profit and loss account 25,000. Okay. So that sale during the year also we have accounted properly. Now nothing happened before the year end. So customary year end depreciation. Now you will find that first machine has been sold, second machine 2 has been sold, only third machine is under depreciation. That's all. So what was the third machine depreciation? 63,000. Okay, let us make entry for that one. As usual, the entry will be Depreciation account debtor to provision for depreciation 63,000. Nothing but provision by depreciation 63,000. Okay. So year-end depreciation also we have accounted. Now what is pending? Year-end balance. Okay, let us one by one balance it. Plant and machinery. Total the heavier side 8,45,000. Put the same total across. Find the difference and show by balance carry forward because it's plant and machinery under provision method. So by balance carry forward. And the depreciation account, well, total the heavier side 98,000. Put the total across and transfer the difference not to balance and carry forward. It is a nominal account. Transfer to by statement of profit and loss account 98,000. Okay, or in other words, two successive depreciation account of the financial year has been transferred to my statement of profit and loss account 98,000. Okay. Now provision for depreciation account. Okay. Total the heavier side. Put the total across the difference and indicate against balance carried forward 1,05,000. Now let us check whether the author has agreed to my worked out answer. What he has first given? Balance of machinery account on 31st March is 4,20,000. Yes, it is there, 4,20,000. Next, balance of provision for depreciation account is 1,05,000. Yes, it is 1,05,000. Loss on sale of first machine 1,47,500. Go to the machine account. Yes, 1,47,500. Gain on sale of second machine 25,000. Yes, it is also confirmed. Okay, that's all for today. Thank you. Thank you for being with me so long. Take care. Bye.